Roadside Real Estate is focused on building and scaling a high-quality portfolio of modern assets. It has the memorable ticker ROAD, and I'm delighted to be joined by the Executive Chairman, Charles Dickson. So, Charles, Roadside Real Estate, it's a new one for me. So, if you can tell us what it is that you buy, invest in, own, and what is the model that is so modern?
Thanks, Sarah. So Roadside Real Estate is focused on investing and developing prime roadside locations around the UK. So a prime roadside location would be a site where there's high traffic flow, it's prominent, it's local, i.e. there's lots of chimney pots around it. And what we're looking at doing is creating locations that people want to go to, are easy to go to. Parking's free, they can charge their car, they can have a coffee, they can get some food, they can do their shopping, and they might be able to get medical appointments, physio, etc. down the line. So the sort of tenants we're focused on are drive-through tenants, obviously EV charging operators, and then what we describe food convenience operators. So anyone from Marks and Spencer's through to Aldi, Lidl, Sainsbury's, Tesco, etc. But in smaller format stores, so less than 20,000 square feet.
So I often drive up the A1 from Hertfordshire, right up to Teesside. Would I see any of the facilities that you have in your portfolio?
There are a few bits and pieces coming out of the ground now. So on the A1, there's a site that near Huntingdon in Cambridgeshire that is being developed at the moment. And then there's a completed location further up that we're currently acquiring. So we only really started actually buying assets in Q4 of last year. So it's unlikely you're going to bump into anything at the moment, but over the next 2 or 3 years, you should be bumping into them.
So one of the reasons I don't have an electric vehicle is the lack of charging points and EV charging infrastructure. So how mindful are you about the electric vehicle economy that is approaching, and how are you accommodating it within the portfolio?
Well, I think there's two elements to it. So there's public policy. The government are mandating that by 2035, internal combustion engines will not be available for sale in new cars. I think that's an optimistic target based on current rollout of infrastructure for the very reasons you just identified. People are driving all around the country with electric vehicles and sometimes struggling to charge them, particularly in busy periods of travel. So it would be that rush hour during the week, or in holiday times when it's Christmas Eve, or it's the weekend before Easter. It becomes very, very stressful charging these cars. And not only that, but there's just actually a lack of chargers, and not just any old charger, fast chargers. There's plenty of trickle chargers around, which might be 3 or 4 hours for a full charge. But anything above 75 kWh for a faster charge, where you can put 70-80% of a charge in under half an hour in a typical EV. That's what we're really short of. We're really short of quick charging.
Are you concerned at all that there may be a change of administration as early as July?
No, I think the Conservative government, well, the existing government have mandated the 2035 ICE, or internal combustion engine ban, but the incoming government are unlikely to change that. If it is a Labour-led government, they're unlikely to change that. What I think is more likely is the ban gets pushed back, just because we're not investing as a nation in infrastructure to enable all these electric vehicles to charge. Right now, we've got just over 1 million electric vehicles on the road, and that is a tiny fraction of current UK fleet. I think the idea that everything is going to be EV, every new car is going to be EV from 2035 at the moment appears wildly optimistic.
So let's return to your portfolio, which hopefully will host some of these super fast charging points. Modern, to me, sounds expensive. So how are you financing the business?
So we signed a joint venture with a US private equity house in Q4 last year, a house called Meadow Partners. And the initial target is to invest 250 million within the first 30 months of the deal being signed. We've already completed transactions in excess of 15 million, and we have an imminent pipeline, i.e. deals that we're looking to complete over the next 3 or 4 months, which is in excess of 100 million.
So how important are joint ventures and partnerships within your model?
Critical, just because of the pure weight of capital that's going to be needed in roadside. It's not a sort of tens of millions or hundreds of millions asset class. It's going to be billions, and billions is required not just in the infrastructure but also in the power. The amount of money we're going to have to invest in the grid and in power generation as a nation over the next 20 years is huge. And I think you can see the existing government, are betting big on nuclear. They're investing heavily in nuclear, and that's probably the right solution. Obviously, wind and solar have a big role to play, but in terms of generating the power constantly to the quantities that we're going to require in 10 years' time, we've got to invest in nuclear, and we've got to bite that bullet.
Do you anticipate any leaning on investors for finances as you ramp up growth?
I think that's too early to say at the moment, because at the moment we're looking to grow with joint venture partners, and I think there's other options in terms of how the public vehicle grows as well. But fundamentally, we're in a great space. We've got a big opportunity. We're investing and developing modern, purpose-built roadside real estate for the future. And in 10 years' time, the sort of sites that we own and develop will be commonplace around the UK.
Who are the we that you were referencing?
As in our joint venture partners.
Yeah, and we, as in terms of the board, how much skin in the game does the board have, directors have, management have?
Well, the current PLC, I'm the largest shareholder, just under 25% of the company, and then my family have got another sort of 35% of the company. So we've got a lot of skin in the game, and we're also investing directly with our joint venture partners. So yes, we're completely financially aligned with our shareholders.
Okay, because one of the taglines on your website is institutionalizing a new real estate asset class. Are there any institutions on the shareholder register, or you're not particularly fussed either way?
I think we're very small for institutions to be investing in us right now. I think this morning we're a 15 million pound market cap business, but we don't intend on remaining a 15 million pound market cap business. As I said, this is a very, very large opportunity. I think as we get bigger, we will attract more institutional holders. We do have a couple of wealth managers on at the moment, but I think in terms of traditional institutional funds who are invested, we don't have any.
I'm trying to visualize the business now and where it's going, because when I cast my eye over recent investor updates, I see Cambridge Sleep Sciences. So what's the relationship with that? Because it's a strange blend of investments, investing in roadside property and infrastructure, and then you've got consumer and life sciences. So, any plans of a demerger or sale of Cambridge Sleep Sciences? How did that come about?
So that was an investment. It's a legacy investment in the public company. The PLC now owns 61% of it. It has gone from strength to strength since the PLC has had it. We've already recouped our investment and more. It's a large asset now on our balance sheet in terms of the potential, and the public company has stated that we will sell or sell down further stakes of CSS to invest in roadside. So the plan is to divest of it over the next year or so, and we've already sold 10% last month.
And how much did you get for that sale?
About 7.5 million.
Okay, so that's adding to the coffers significantly. Now, if you had a time machine, I know it's all about being modern, would you be eyeing up little chefs and roadside wimpies to join the portfolio to update, deconstruct and reconstruct?
Absolutely, that's 100%. Those what are called trunk road sites, providing they've got good proximity to towns and cities, are absolutely the sort of sites we'll be looking at. So
the plan for the remainder of 2024, because you seem to be going at quite a lick in terms of pace.
Yeah. Well, we're nearly halfway through it. Yeah, we're just going to carry more of the same. We're looking to really deploy a good chunk of the £250 million commitment with our joint venture partner before the end of the year. We want to be well ahead of the curve on that because I think that's just going to be the start.
And finally, are you having fun? Because the idea is that you actually really enjoy the enterprise that you're leading.
Yeah, no, we're having fun. I mean, we're growing a a new real estate business, focusing on a very attractive asset class where there's rental growth, and yeah, we're enjoying it. It's very, very busy at the moment. We're seeing a lot of opportunities. There's not much competition for sites. There's not a lot of depth to the market. So I think we're well placed to construct a very, very good portfolio.
Wonderful. Charles Dickson, Executive Chairman of Roadside Real Estate. Thank you very much indeed
Thank you.
for joining
Thank
us.
you for your time.
Thank you.